Let's go, baby! I had to say that one so far from the mic. I'm so hyped right now. You want to know why? Meta just reported earnings, and this thing is going to, as some might say, the moon. 15%, sorry, 14% up after hours. I apologize. $55 per share increase after hours, after results of these earnings. What the heck? In this day and age, a stock doing that? That deserves to do that? What's going on here? There's got to be something fishy going on. Let me tell you, I've taken a peek at these earnings and about as delicious looking as the meatballs I've got in the oven. I got to get this video done within that time frame. Otherwise, these meatballs are going to burn, folks. And you don't want my burnt balls. Let's not say nobody does. So let's just take a look. Obviously, you look at the stock. What the freak? Already up 1% today. We saw a little bit of a rebound in the market. And then here they come reporting earnings. And up 14%. Let's take a look at the headlines, see what we can see. I'll just tell you, something happened that I told you guys would happen eventually. A little bit quicker than I thought. But hey, here we go. This is the absolute greatest looking thing I've ever seen. That's a headline you love. Shares jump 50% after profit triples. We're going to take a look at those numbers. You know we love looking at the profit numbers. I've told you from the start, Meta is a company that prints money. We're going to take a look if that came true. Looks like it might have. And here is, look, that aside, the reason why this stock is up so significantly, otherwise this would be a 4 or 5% jump. The extra 10% is 100% attributed to this. The company has announced its first ever dividend. That is massive. And it's massive for many reasons, right? So not only as a shareholder are you happy to have that because they give you a little bit of extra money. I told you this would happen, by the way, because this is a company that prints money consistently. I knew eventually they'd get into a phase I thought would be within the next 2 to 3 years. I didn't think it'd be this soon. But here they are paying that dividend, right? So the other really good part about that, if you're a shareholder of Meta, is this opens up the interest of investors that weren't necessarily looking at Meta, right? So there are certain investors with big money out there that will not invest in companies if they're not paying a dividend. And here we go with Meta announcing that they're going to be. That's pretty massive. You're opening up the market for a whole new type of investor than Meta's used to. So it's big from in multiple ways, right? So look at the headlines and we'll see. No shocker. You're going to expect a beat in terms of that revenue because I told you, like I was saying in the earnings video preview, the ad rates, they've recovered significantly and Meta's going to benefit quite a bit. Let's look on an EPS standpoint. And this is a number that's honestly it's astonishing that I see a number this high. $5.33 versus the $4.96 expected. That's crazy, right? I mean, that is anyone else believing that that's crazy? 36 cents above that expectation. It's just a massive number anyways, and it just goes to show how much they print money. They do. They print more money than the Fed, it feels like. Revenue, just a beautiful line here, 40.1 billion versus 39.18. I told you they'd beat in terms of revenue, so I'm not shocked here at all. I could have seen it being a little bit higher. I mean, it's just shy of $1 billion in terms of a beat. I could have seen it being higher, but it's still a great beat. So, and here we get into the daily active users. I'll kind of skip this for now because we're going to go ahead and look at we're going to look at that when we look at kind of the charts that they release, and I love looking at the charts. You know I love charts. So revenue was up 25% year over year. That's insane, by the way. That's a fantastic double-digit growth. You don't see that. That's one of the wildest parts here, too. You don't see companies paying dividends that grow revenue at that rate. You just don't. That's really what's astonishing me here, too. So expenses decreased 8% year over year. I'm not shocked at all. And operating margin doubled. And that's going to be because of cost-cutting efforts, right? We're laying off people that were non-essential. A lot of people were non-essential for these big tech companies. They hired way too many people in 2020, 2021, and they're finally seeing that. Online ad market recovered here, as I say, fastest growth rate of any period this revenue was, by the way. That's kind of crazy. Net income, this is, I mean, this is something that's astonishing to me. $14 billion of net income off of 40 billion of revenue. One third, sorry, more than one third. We're talking about 35% of your revenue is straight net income, pure cash printing. That's kind of wild. And that's compared to, yeah, that's right, $1.76 of a year ago. Yeah, it did triple. There's no denying. And here is where the big news comes here. They will pay investors a dividend of 50 cents a share on March 26th. Now you look at that and you say 50 cents, that is a tiny dividend. It's going to be quarterly, just so you know. But here's where it comes from. So the cash equivalents swell to $65 billion. They've got a crap ton of cash, and they're also going to be buying back stock, $50 billion. So here's what they're doing. By utilizing this dividend, they're going to get more people interested in the stock, which you already are seeing in after hours right now. You're going to get an entire different investor base interested in the stock. And you've got so much leftover cash, there's no reason not to at this point because it's a pretty small dividend, all things considered. $2 per share based off of a $450 stock price. If we just made it easy, let's say the stock was, well, let's just say it's 0.3%. I mean, it's tiny. It's tiny is what I'm trying to tell you. Well, I guess not. Now that I'm thinking about it, hold up a minute. That's pretty good, actually, when I'm thinking about it. Why am I being dumb here? I don't mean to be dumb. That 2 cents or $2 per share on an annual basis, if it's a $500 stock, I mean, that's it's 0.4%. Okay, we did the math. Sorry, I was struggling. It's, yeah, 0.4%. So I don't know why that took me so long in my brain to figure that out. Dumb from me. I should have done the math beforehand. Yeah, I get it. So that's good. And the main thing, this does, for some reason, the CNBC article doesn't mention it, but they did say that it's something they're going to be, keeping this dividend, right? It's something that they plan on paying for the near future. So these balls don't burn. Let's get into some of this stuff here. So here's the report first, then we'll go into kind of the charts here. Or the graphs, I should say. So here's the charts. Here's where you really see the difference there. 201% growth in terms of that net income line. I wanted to highlight that. That income for operations, obviously you see that. Revenue on a total year basis, so the trailing 12 months here, 2023, increased 16%. That's a ridiculous amount of growth there. And from a net income standpoint, group, there's no better percentage than this one, 69%. It's the best percentage you could possibly fathom. Now, here's where we'll talk about the family daily active people because that's good. It's good to know people are on the platform, right? Family daily active people, or they're calling it DAP. You want to DAP someone up. This is what they're talking about, folks. I never knew until now. I always wondered what DAP meant. Next, I do need to find out what WAP means. What's WAP? I don't know what that is, but it might be related. Weekly active people. That's going to be it. That's what that song was about. Weekly active people on Facebook, maybe Instagram too. Anyways, daily active 3.19 on average, increase of 8%. That's wild. Monthly active up 6%. It's hard to believe to me. Even Facebook, because they give one, family, they give that, which is going to be their whole family of apps, Instagram, WhatsApp, blah, blah, blah. Even Facebook grew 6% daily active users. That's kind of crazy. You feel like people aren't coming on to Facebook at this point. It feels like the old social media platform, but it's really not. It's really not. Definitely impressive. So ad impressions and price, we like this one. So ad impressions delivered across the family of apps increased 21%. That's massive. And average price per ad increased 2%. We do love to see that. Obviously, we love to see this share repurchase plan. They repurchased $6.3 billion and 20.03 of our Class A common stock in the fourth quarter and full year, so $20 billion for the full year, respectively. Headcount, this is something that's good there too. Decrease of 22% in headcount. There were so many useless employees. They had nearly 100,000 employees. They've cut that down to 67,000. And that, you see how much that increased the net income, right? That's beautiful. I love to see that. I really do. Let's get into some of these charts because, man, it's that timer's about to go off, buddy. Uh, so advertising revenue by geography, they'll mention this every segment. You'll see growth there. It's good. We saw a little bit of a dip here. We see that growth back up, baby, and it's beautiful to see. Revenue by user geography, I don't care much about that one. Some people do. They care about China. Let's zoom this out just a little bit so you can see it a little more. There we go. Yeah, that's good. That's good. So advertising, this is obviously the big piece of it, and you see it's not only recovered from where it was at its peak, but it's way beyond that. Other, it's going to include, like in this case, really just the Oculus headset. It's such a minor piece of the business. Or sorry, they've got that in the Reality Labs revenue. Still a minor piece of the business, right? We're talking about $1 billion, which is a lot of money, and you can see the growth there. A lot of people bought, I'm guessing, probably a lot of Quest 2s and Quest 3s for Christmas, because this is the Christmas quarter here for them. So great to see where that stacks up, and you see just consistent growth, and it's beautiful to see. It really is, especially when you look Q4 for Q4. So really good there. Operating income, and here's where you see Reality Labs. Imagine if that wasn't in there, how much more they'd be printing. They spend a lot of money on Reality Labs development, and it makes sense that the technology they're working on growing. They're paying for the metaverse. They're going to live by the sword, die by the sword. I don't think they're going to die by the sword, though. I think they're going to be living by it and thriving by it. So yeah, you see operating margin continue to grow there. Effective tax rate, I mean, not really super relevant, but 17%. A little bit less for them this year, which is good. Net income, this is the chart I love to see. Here's where you see peak expenses. We hire too many people, spending too much on Reality Labs, and we're starting to trim. We're trimming the fat. And we're at a beautiful point now. Love to see that, and obviously the EPS is going to be the same thing. Capital expenditure going to be similar. Well, now that distraction's out of the way, don't mind it. Those dogs were barking. I'm not talking about my tootsies. I believe we were talking about fapping. No. We're talking about DAP, not FAP. Way different things. You can tell my Instagram does not have a link tree in it. Otherwise, you would see the other term that I said first. It's not in there, I promise. To many people's chagrin. So anyways, we see these charts of the active people in terms of billions. Just continual growth. I mean, it's really just, you never see it dip here, which is obviously good to see. Average revenue per person, you see a massive jump here, and that's just because of that the ad revenue line here. So do love to see that. And again, we keep going, goes into segments here, and a good piece of here is a lot of these active users are coming from China, Asia Pacific, and rest of the world make up a majority. You ever right click accidentally? I just did. On this mouse, I do more than anything. So here's this free cash flow statement. Love to see this. This is where you can see just the beauty of what they're able to do, man. This is a company that prints that cashish. It prints the cheddar. You may even call them. You might even call them Sargento because they're printing the cheddar. Took a little bit longer than I wanted. That's the statistics. We'll get into that in a second. I want to look at the balance sheet again real quick. Because I know earlier they talked about how much the assets had swelled. Let's see if that's the case. And so far, it looks like it is. Total assets here, $229 billion against that 1 year ago. I love a 12-month comparison. I do. I do. $185 billion. Significant difference there, right? We're talking about $44 billion extra in terms of assets that's been added in a year's time frame. Now, with that, you'd expect liabilities to go up as well. You can't just, increase assets by that much in a year without liabilities going up. So, let's take a look there, and we see $76 billion against $60 billion. That's wild. Again, so And I've said it all the time when I talk about Facebook, right? Sorry, it's Meta now. Still throws me off. I'm an old head, some might say, old time shareholder, and it's paying off. Let me tell you. Told you it was my top stock for the year. That's all I'm going to say. 153 billion dollars of shareholder equity. That is absolutely beautiful when you're talking about the whole balance sheet being 229 billion. There's not many companies that do it better than Meta. Better than Meta is what I say. No one does it better than Meta. I'm willing to accept or at least hear out a job offer, Zuck. I'm willing to hear about it. I know you're trimming the fat, but there's no fat on this guy right here. It's been a little bit lately. Dad bod growing in just a little bit. So we look at the statistics anyways, because you want to know where this is going to put us. Well, you know, all things considered, where Meta was trading prior to this big jump was at really historically low levels. It's never traded at a lower PE ratio. And here, obviously, after a 15% jump, you're going to see that fluctuate quite a bit. The forward PE ratio was around 20 prior to this. It's going to be closer to, now again, forward earnings will be adjusted, so I'm not going to say it's going to be way out of this world, but it's going to be probably right around 30 in the forward PE ratio line. Probably less than that, honestly. I don't think, and the actual trailing PE, which, you'd think it increased 50%, it'd be right around 40, a little bit less than that, but they also beat expectations. Um, it's going to be less than 40. And I'm just going to tell you, somehow after a 15% jump and all-time highs, the stock is still not overvalued. I'm telling you that right now. So I look at this data, and I'm not upset at any means. So that's Meta here for you. Just killing it. It's killing the game. I'm gonna have to edit these two videos together, and then I'm gonna just slam it in your face. Slam it!